What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a relatively flat day in the stock market with the tech sector continuing to lead the way. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see SPY going up 0.05% and we did get a nice looking doji candle. We still have this gap down here at 424, so that's where we want to set our risk. But do know that we did close over 427 for the second day in a row. So with two price action closes over a price target, it definitely validates that we're very likely going to the next price target above, which is sitting all the way up here at $430. So 430 is looking very likely with today's price action, but that doesn't mean that we can't see a pullback on the way there. Now, one thing I want to get out of the way with this market is look at this long consolidation that we're coming out of. You can see here we did have one attempt to break out in the middle of June, and that attempt failed due to quad witching, and we did see a volatile sell-off. But we did find support on the 50 EMA in a bull market, which is always going to be a strong support level. Now we're bouncing with an impulsive move off of that strong support level, and we're breaking out of this consolidation period yet again. If you look at the bottom of your screen, you can see this consolidation period started in the middle of April, and we've been correcting through time ever since. Remember, April was a very strong bull rally, and it was so strong that it triggered a correction through time, and we really didn't see SPY going much of anywhere for about 3 months. Now we're getting very close to the end of June and the beginning of July, and we could be starting a new bull rally. So keep an open mind and make sure you're staying objective. Don't just look at this market and think there's no way it can't go any higher. If the market is bullish, it's always possible it can continue to go higher. So watch the price action and the trend because they're both still bullish, and we do have a very strong bullish trend on the NASDAQ 100, so I'm still expecting to see tech carrying SPY higher. We still need to see strength in the financials and the industrials to really get that full bull market for the summer. But just know we're breaking out of a long consolidation with relatively bullish price action and trending on SPY. Obviously, the tech sector is much stronger, which we'll go over when we look at the NASDAQ 100. So as far as support levels go, watch support below at 427, 425, and the gap close at 424. We also still have support at 423, and that 20 simple moving average is getting ready to cross over that level. So each and every day that goes by, our support level that's the most critical is continuing to go higher and higher. So the bulls have the advantage in this market because it's a bull market and the trend and the price action are extremely bullish. So don't look in the rearview mirror at these pullbacks because these are in the past and you don't want to have recency bias. These pullbacks that are already complete are what's causing this bull rally to be so impulsive. Everybody that wanted out sold, and now the people that want to be in are already in their positions and they're riding it through the summer bull rally. So if anything, look for shallow pullbacks as we continue to march higher, and it's still possible we blast through 430 and continue to go even higher. There's still a lot of short sellers in the S&P 500, and eventually they will be forced to short cover because it's either that or continue to lose money day after day. If the market continues to go higher, those short sellers will eventually cover, and that could send us to our price target or possibly even blow off the top and go well above this price target. So keep an open mind and stay objective in this bull market. On the NASDAQ 100 triple Qs, we went up 0.36% today, and we continue to see the triple Qs leading the way in this bull market. We see the price action still well above the positive sloping 5 EMA, and I said this last night, this is one of the most bullish trends you're ever going to see. All of these moving averages have really nice separation, and they're all very aggressively sloping to the positive direction. So this trend is very strong, and I don't expect this trend to die easily. So this is the second day in a row closing above our price target at 353, and the next price target above is at 359, and we have tons of price targets in the low 360s. So from today's close to our first price target up here is still another 1.1% move to the upside. So yes, the market can continue to go higher and more than likely will continue to go higher as long as there's people doubting this market and trying to short it when it's this bullish. The market can and will continue to climb higher. So watch the trend in the price action because it's bullish, and as long as it's bullish, you either want to be in the market and you want to reap the rewards, or you want to be in cash and wait for the next pullback. So look for support on the triple Qs at 353, and below that we really don't have much support until we get back to about 346. We still have that 13 EMA, which still could be support, and that's sitting right around 347. The strongest support of all though is always going to be this 20 simple moving average, which is very close to getting to about 343 as soon as tomorrow. So there's still a ton of support below the triple Qs, even though there is a little air pocket between about 353 and about 346. So that could be one of the shallow pullbacks that we could see in the near future. But again, we don't know when that's going to come, and there's no reason trying to call a top in a bull market. So follow the trend and follow the price action. and you're more than likely not going to get FOMO if you leave some position in the market. Have that long position and let it ride and just save up cash for the next buying opportunity. On the Dow Jones, we were very flat on the day and we closed just right on top of that 20 simple moving average. Overall, that's a win for the bulls because remember, if we see strength returning to the Dow Jones while we see strength in the tech sector, that's really going to help push SPY to brand new all-time highs. So if we can get those financials and industrials looking bullish again, the Dow Jones will continue to go higher. Right now, we don't have a trend for the bears or the bulls, and we still do have support down here right around 341.7. The gap close in the 50 EMA support is still 340, and if we break below the 50 EMA, that will be bearish, and we'll be looking for support at 336.8 or the gap close down here at 331.6. But overall, if the Dow Jones continues to push higher, look for resistance at 344.7, 348, and the previous all-time highs in 350. On the Russell 2000, we dropped about 0.5% and closed right on top of that 20 simple moving average. We still need the 13 EMA to cross back over the 20 simple moving average to get the full bull trend, and we need the price action to get back over resistance at $230. But overall, looking at this chart, we are very, very close to having a full bull trend in the Russell 2000. So if all of these markets go bullish together, we are going to see a very strong bullish rally in the summer. So even though there is possibility we see some slight pullbacks from some of these levels, you can tell the market continues to build up bullish trending, and that will help push the price action higher, and I am expecting to see a bull rally in July. So on the Russell 2000, look for resistance at 230, 233, and 234, and above that, we're looking for all-time highs at 237. Your critical downside support is right at 229 and 227, and the 50 EMA right around 226. On the Arkk ETF, we were up about 0.5%, and we did break through the next resistance level at 130.6. Again, this is bullish price action because we continue to break through resistance level after resistance level, and there's no way you can look at bullish price action as anything other than bullish. We continue to march higher, and the next price target and the next resistance level is sitting up there at 135. We still do have a gap below to close, which won't close until we get back to about 126.5, but we do have a support level above that about 127. So Arkk is looking very bullish, and we do have the full bull trend, so this is a buy the dip market. One of the strongest support levels will be right around 123, and our 20 simple moving average is now sitting right around 118. That will continue to climb as the price action climbs higher, and Arkk does look like it's ready for a summer bull rally. So look for these growth stocks and these technology companies to continue to do well as long as we continue to see strength in these technology sectors. On the VIX, we were up 1.78% today. On a day, the S&P 500 was relatively flat, so we're definitely seeing a little bit of fear as we continue to march to all-time highs. Again, that is a healthy amount of skepticism, and that usually adds fuel to the fire in a bull market. So as long as the VIX is below about 16.6, that's still a very low fear level, and we would need to see the VIX getting back over 18 and then back over 20 to really see a volatile correction in the stock market. So right now, the VIX is not telling us anything other than expect a continued bull market. The VIX is below this resistance level at 16.6, and it's below the 5 EMA, and it's in a bear trend. So the VIX is bearish, which is bullish for the overall market. On the US dollar, we did see a bounce today after this consolidation over the 5 EMA. Remember, if you're trading gold and silver, you are going to want to pay attention to the dollar. We also saw that 20 simple moving average crossing back over the 50 EMA, so the dollar is now in a full bull trend. On gold, we see it reacting to that strength in the dollar, and we're back to our support level at 1761. If this support level breaks down, the next support level below is going to be 1686, and we now have resistance at 1776 and 1819. On silver, we see the same story reacting to the strength in the dollar, and we're back to that support level at 25.78. Below that, we have support at 25.1 with upside resistance at 26.5 and 26.7. On Bitcoin, we're currently up almost 5%, and Bitcoin is doing what I talked about in the Sunday episode. Remember, I said it's very likely that we double bottomed off a $30,000 support, and I was actually getting a lot more bullish on Bitcoin. Well, so far, it looks like that's exactly what's happening because we see a strong impulsive bounce off of that level, and we're back over the 20 simple moving average. So right now, the next hurdle for Bitcoin is going to be getting back over the resistance level at 39,000. That's where the 50 EMA is, and that's going to be a very critical resistance level. If Bitcoin can get back over the 50 EMA and stay there for a few days, you're going to see a lot more people flooding into Bitcoin, and eventually Bitcoin will start back into a bullish rally. So right now, as long as Bitcoin is over $30,000, I am bullish on Bitcoin. I can't make that clear enough that Bitcoin is not in a bull market yet, but the price action is king, and the price action is proving to us that Bitcoin does not want to go any lower than $30,000. That's enough to convince me to be a buyer at these levels, and I do want to watch that resistance level very closely at 39,000. As long as we're back over the 20 simple moving average and making an attempt to break back over the 50 EMA, you want to remain bullish over that $30,000 support level. If that support level were to break down, we could still go to 27,000, and below that we could go to 23,000, but we're simply not seeing a breakdown in that support level. On Amazon stock, we were pretty flat today, going up 0.12%, but we did close back over the 5 EMA. Remember, Amazon's in a full bull market and we're coming off of a dip, and when you're in a full bull trend, you want to buy the dip. So that $3,400 support level was looking awfully juicy as a buy the dip scenario, and we could be breaking out and forming new all-time highs from these levels. So look for Amazon to try to break back over 3,500, and then the next price target will be 3,552. Downside support is 3,431, 3,400, and our 20 simple moving average is now sitting at 3,372. On Tesla stock, we were down a little over 1% today, but we're still over the 5 EMA. Tesla's price action is looking relatively bullish because remember, we did break out of the resistance trend line, and we're still holding over that breakout level. We still have a gap that won't close until we get to about 659, but there's no guarantee that that gap has to get filled at this time. So pay attention to that gap and set your risk at that level, but do know we're still having this bullish breakout look and we're holding up as support. We still need to see the bulls break over resistance at 692 to run up to the next price targets at 714 and 765. So downside support, you're looking for 667, the gap fill at 659, and our 50 EMA at 640. Once this 20 simple moving average crosses back over the 50 EMA, Tesla will be in a full bull market and it's going to continue to run higher. So we're very close to seeing a bull market in Tesla, and there's no way you're going to see a bull market in Tesla if we're going into a bear market for the summer. So again and again, I keep telling you, it looks like we're going to see a summer bull rally. So stay objective and continue to watch the price action and the trends. A lot of these stocks that move the market are looking very bullish. And as you're going to see with Apple, we also have a full bull trend. Apple is one of the best stocks for a market moving stock. And we did see Apple breaking out today. We broke through 135 with the next price target at 137. And a breakthrough at 137, we could see Apple running to brand new all-time highs into the 140s. Downside support is going to be 135 and our breakout level down here around 132. Apple has the full bull trend, so you want to buy the dip in the scenario that you do get the opportunity to buy off of these support levels. The trend is very strong and it's only picking up momentum. And if Apple continues to go higher, you are going to see the tech sector continuing to go higher with it. On the financial sector, we were down 0.35% today and we closed right on top of the 50 EMA. If we can see strength returning to the financial sector at the same time we see strength in the tech sector, you are going to see SPY looking very strong and you'll see the S&P 500 continue to push higher. On the industrials, we were down 0.2% today, and that's the second day in a row closing back below the 50 EMA. So the industrials are not looking bullish and they could be coming down for another leg lower. Look for a possible double bottom attempt, but if we see the industrials regaining strength, that will be a very bullish sign for SPY. On the healthcare sector, we were up 0.11% and we still see the healthcare sector with bullish price action and a strong bullish trend. The energy sector was down about 0.5% and it does look like it wants to retest that 50 EMA as support. Look for the energy sector to try to bounce off of that support level or break down and go much lower. So jumping back over to the S&P 500, you can still see that the tech sector and the healthcare sector are carrying the S&P 500 higher. The financials and the industrials could regain strength at any moment, and that could add more fuel to the fire and push the S&P 500 even higher. So this is not the time to be a bear, and this is not the time to be short selling. Don't try to call a top in a bull market, and you want to trade with the direction of the trend. The trend is very strongly bullish, and I showed you that we're breaking out of a consolidation that started since the middle of April. So now is not the time to have your bear costume on, so put it back in the closet, and if you're getting nervous at these levels, just go to cash. There's no reason to try to short a bull market and lose all of your money, so block out all of the noise and stay objective. Also remember, I have my trade alert service, which only trades TQQQs, and it sends you buy and sell alerts via email and text message. It's a very simple system to use, and all of the details are in the description below. I'm running a 50% off promo code for your first month, so if you're looking to try out the BANC system, now is the perfect opportunity. Don't forget, I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market. And I'm also bringing you plenty of trade ideas to help you crush this market. All of the details will be in the description below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.